All right. All right. Good morning. Good morning, everybody. Ladies and gents, happy Tuesday morning, 6:30 a.m. Central Standard Time, February 17th. Just got finished with a long Monday, guys. It was a slow Monday for me yesterday. It's always like that when we don't have any high impact news come out, right? It was quite the quiet day yesterday, but today should change things up a little bit. So let me see. Let me get my screen shared here. We'll take a quick look at the economic calendar, some top setups, and see what's on the docket for the day. Um, Hello to you, Marvin. Marvin from the Philippines. Good to have you again, guys. Remember, I'm a brand new stream. Okay, I have just a small handful of you, loyal viewers. So I do appreciate you. As always, if you can, just tell a friend. If you happen to know anybody in the trading community, just tell them about my stream at Trade Like a Tiger and see if we can't grow this thing. If you build it, they will come. Okay, that came from one of my favorite movies of all time, Field of Dreams. I think it was made back in like 1989, something like that, where he builds the ballpark at the sign of some whispers. If you build it, they will come. And then the ghosts of baseball past come back and they actually play a game. So it's really a cool movie, but that's kind of the mindset I have with this stream. I'm not expecting it to grow to 500,000 subscribers or anything overnight, but maybe little by little, who knows? Maybe we can chip away at that, start growing it a little bit. I enjoy this. This is my highlight of my day, believe it or not. I love trading. That's obviously why I'm here, but I love streaming just as much. It's just nice to be able to help people with, even if it's just one tiny nugget, each day, something small, just a little lesson I can talk about, whatever, to help you out. Because I know a lot of people that pop on here are probably newer traders. Some of you may just be casual viewers. Some of you may be serious about this thing. Trading is hard. It's difficult. I've been doing it for 12 years now. And so, any way I can help, I'm here because I've made all the mistakes in the book. And that's exactly who you want talking to you in this streamer seat, is somebody who has made all the mistakes, somebody who has screwed up and taken their licks, so to speak, and learned their lessons. So that's why I'm here. And I enjoy doing it. So yeah, we'll just take a look. Today is, of course, Tuesday. Looking here at the economic calendar, and it looks like I've got all the stuff that I don't really care too much about on here. So I'm just going to filter it down to just the high impact red folder events. And here in an hour, we do have some Canada news coming out right away. We'll see what their inflation looks like. Their CPI, their month over month, and then the median and trim CPI. So it's just a couple subcategories within the CPI, guys. There's usually on a lot of these things 4, 5, 6, 7 different folders. But one thing I like about Forex Factory is it kind of simplifies it a little bit. I mean, a good example, if I go into my trading folder here and I pull up something like Rebate King FX, okay, looking at the same inflation report, it's going to typically give us a handful of other folders or a handful of other items. So, so if we're looking at Canada, guys, here you go. I mean, there's one report for CPI, there's 2, there's 3, there's 4, there's 5, there's 6, guys. So this is what I was talking about. This just kind of breaks it down into all the individual specific parts of the report, whereas Forex Factory simplifies it to just the basics. So we had 6 on Rebate King, and over here on FX Factory, we've got 3. Okay. So it just kind of simplifies things a little bit. All I really care about is the top line numbers. I don't really personally care about all the individual folders like Rebate King or some of these other calendars out there. Now, this, I will say, though, when it comes to other calendars like Rebate King and, what else have we got? FX Street has a calendar. My FX book, okay, they have a calendar. It's good to kind of periodically compare and contrast calendars because every now and then there'll be something on one of these more in-depth calendars I've noticed that's not on FX Factory, and vice versa, or Forex Factory, I should say, guys, not to abbreviate it. So it's just a good idea. If you're new, if you're brand new, I wouldn't worry too much about this. But when you start really digging into this stuff, there comes a point where it is kind of nice to know how all these individually break down like this, guys. So I wouldn't worry about it too much. If you want to just stick to the main top line items, I would just stick to forexfactory.com. It's a really good one. And on that note, though, if you ever were to get the Edge Finder from A1 Trading, there's actually a calendar on here as well. Okay, down here, economic calendar, and then it'll go up to the reports as well. So there you go. There's your Canada inflation numbers right there. Okay. So and Trader Nick and them even break it down to a little bit simpler, it looks like. So CPI month over month, because this is really what the algorithm is looking at specifically for this particular report is the month over month. Okay, when we're talking about the Canada inflation. And speaking of inflation for Canada, let me see. Let's go to and hello, iHouse. How are you doing, by the way? Good to see you. Was just kind of going over some of these economic calendar events here. So if I go back to, let's see, economic data, I want to go to inflation. I want to go to, let's see here. Let me just double check something. CPI month over month. You know what? And these are that's okay. Let me go look at one other thing over here. Median trend. So 2526, 2526, 2527. 2526. Okay. Yeah, I was just looking specifically which inflation report that they've got. So let me go look at one other thing. Canada CPI down here, a year over year. Oh, okay. So yeah, and we don't even get the year over year today. Okay. Because that's the one that's tracked by the Edge Finder itself. When we're talking about the economic heat map, okay, for the currencies. So Canada right now sitting about 57%, pretty neutral overall. Okay, just slightly a bullish tilt, very slight bullish tilt. It has had 4 surprises to the bullish side of the 8 reports that's on here. So half of them have been good. And then you've had 3 bearish and then 1 neutral. So anytime you see a neutral report where the economists basically got it correct, then that just simply means we can just kind of skip that report. Because all we really care about when it comes to currency strength or weakness is how many times how many reports exceeded expectations versus how many times reports missed expectations. Okay. So it's really just a miss or a beat is all we really care about. Again, neutral items like the employment change number they had, that just cancel each other out. So anyway, that is the 7:30 report coming out for inflation here in a while. So anyway, that's that hour before the U.S. market open. Okay. U.S. market opens for me where I'm at in Kansas City, opens at 8:30. And then the other reports are not till this evening. The Kiwi is going to have their rate statement, guys, where they are projected to keep their rates the same at 2.25%, followed by the lip flapping session right after that. Again, that's going to be for the Kiwi. So we'll see how that turns out. I know I'll be tuning in tonight. What's going on, Zambezi? How you doing? Guys, if you have any specific pairs you'd like me to look at, today's a great day for it because I'll be quite honest with you. If I go back to my top setups, we are quite light in the loafers today. We don't really have a ton of stuff. Now, all these items that you see on the list here, yes, they are obviously bullish up here, bearish down here, but they're quite low. They're pretty low of scores. Okay, if you guys have heard me in the past, I've mentioned that I really don't care a ton about a lot of these 5s and 6s personally. I really want to see a lot more strength and a lot more weakness in these assets. So give me something that's like this, -7 or lower, -8 or lower. okay, or +7 or higher, +8 or higher. The higher the score, guys, obviously the more tilted it is towards that, the value is for that base currency or the quote currency if we're shorting. Okay, as far as looking at strength versus weakness. So yes, these are bullish and bearish signals on here, and I'll still look and I still get into a trade if I see something. I'm not saying I won't. I'm just saying that obviously the higher or lower the score is, the higher the probability is of that trade actually working out. So hopefully that makes sense, guys. Excuse me. But I did get into a trade, by the way, guys, just a little while ago. This Aussie Kiwi up here, okay, giving us a nice +5. Again, it makes the list. It makes the list, but just barely. So I went ahead. I did find a spot to hop in on this trade. I guess I can just trading. We'll pop up this chart real quick just to see where I am at. Actually, no, let's go back over here real quick because this is where I have all my analysis. So Aussie New Zealand, guys, this is a trade I just got into. So a daily time frame, higher highs and higher lows, as you can see. Zambezi, you say pound Aussie is one that I really want to be in. I just either keep missing the entry or there isn't a good setup for me. Let's take a look at that right after. Yeah, because I think you mentioned that one yesterday, or somebody mentioned pound Aussie yesterday. But yeah, let's take a look at that. I'll just do a quick look at this pair here, and we'll go to that. Aussie, New Zealand. So daily, we got higher highs and higher lows. We go to the 4 hour, same thing, higher highs, higher lows. Now, you could make an argument that we have recently kind of changed. So a lower high and then a lower low at this wick. But this wick is actually where I got in. So if I go to a 1 hour time, a 2 hour time frame rather, sorry guys, you can see over here we got this candle. You could call this an indecision candle, but I call it a fat indecision candle. Kind of like a spinning top, right? You got your wick on the top, wick on the bottom, and it's not exactly a tiny body like you would normally, that you would normally refer to when you're talking about indecision candles, because it's quite meaty. Okay, the body takes up almost 50% of the range, right? Not quite. Let's call it 40% for argument's sake. But it's to the top side, right? So it's a green candle. So anyway, you got the uptrend, and then you had these sellers that said, oh, hell no. And they slammed price right back to the start, right? And then in this candle is where you had buyers and sellers duking it out. And then the buyers just slightly won. Now, after they won, though, they took price the very next candle, the leg out, and just slammed it past the previous highs, right? So that's a pretty good strength. That's a pretty good sign of strength, in my opinion. Okay. So I'll wrap my rectangle around it. You see we have come down here. Now, another thing I like about this price point, guys, is the fact that we had a double bottom. Look at this. Okay. Right here, you had buyers step in, okay, as it consolidates and then pushes price up. So where are these buyers putting their stop losses? Likely right here in this area. Okay. Same thing over here. Right. Same thing happens right here. Okay. Price got exhausted. It came back, maybe some profit taking. Then we base again before price gets pushed back up. So there's buyers in here pushing price up. So where are they putting their stop losses? Down here, right? And what are their stop losses if they're a buyer? They're sell orders, right? So always keep in mind, hey, when people are putting in gigantic orders in hedge funds and trading firms, the big banks, okay, the interbank system, when banks are trading with each other, or anybody really wills, okay, anybody with gigantic accounts, they need liquidity. Okay, they got to have their liquidity. They got to have these orders to fuel their order in the opposite direction. So price comes down, and then not to mention we got the unfilled orders from the demand zone itself, which showed strength because look at this gap. Is that not a gigantic gap when we're relating it to the size of the basing candle? Okay, think about that. That's quite the nice looking gap. So you have a candle you have a basing candle. It's about, we'll just call it 10 pips wide. But then you have the gap that's just over twice the range. So that's strong, guys. That's a nice, strong push away. Real strong. And then when the candle, when the leg out candle closed, obviously you had the candle after it, and there was no sellers saying, oh, hell no, we ain't trying to touch this. So that's a sign that demand heavily exceeded supply. Okay. So that's why I wrap rectangles around it, and that's why I put alert just ahead of it. But when price came back to there today, what I ended up doing as far as how I got into the trade was observing this. So let's go to the daily. So obviously we know we have daily higher highs and higher lows. But what we also have, just as a kind of an extra or an added confluence of that, is this red line. This is an exponential moving average of 8. So in other words, it's tracking the average movement of the last 8 periods, which in this case would be 8 days. Okay. And it is above this lighter red moving average, which is a 21 exponential moving average. So it's looking at the average of the last 21 days. So anytime I have the 8 above the 21, it's just an extra verification that, hey, we are in the trend where the 8 is, closest to price. So in this case, price is here. Obviously, the 8 is closest to price. Okay. So 8 above, that means we are obviously in a nice uptrend that's been validated by, several days of movement. So we go from the 8 hour down to the 1 hour. Okay, which is where it's starting to bounce into my demand zone down here. And now down here to verify the trend is up. Okay, we're looking at this light blue line, which is a 50 EMA. Okay, exponential moving average, meaning it's weighted towards the more recent periods of price action. So it's different from a simple moving average. Okay. This is more weighted towards the back end. Because what's more important, recent price action or price action from, more periods in advance or in the past? We care more about the recent price history. So that's why we use exponential moving average. Okay. So anyway, that's our 50, this light blue line, and it is above this blue line down here, which is the 200. Okay. This is a very standard exponential moving average. That a lot of whales like to use, a lot of trading firms. Okay. And again, like I mentioned yesterday, this is part of what I added to my repertoire, and part of the psychology I learned about this over the weekend. This is what I learned from the new strategies I built or I learned. Okay. And again, all this is doing for my system is just acting as a filter. It's actually working pretty damn well right now, I got to admit. But yeah, 50 is above the 200. So that means that on the 1 hour time frame, the trend is still looking good according to all this recent price action. So what happens? Okay. When price comes back to the 200 or lower, which is fine, then I want to make sure, okay, is my RSI 6, my relative strength index, did it go below 20? So remember, I don't use 70-30 on this, which is the standard RSI settings. I use 80-20. Okay, if I go open that up, you'll see here 80 for the upper band, 20 for the lower band. Normally, when you open this up, this is going to be a default setting of 70 and 30. But the reason why we change the settings is because it gives us more extrema readings. Okay. It's going to filter out some of those other ratings between 70 and 80 or between 20 and 30 that may not work as well. But the other thing is the RSI length. Okay. This is always defaulted at a 14 period when you first put a RSI on, but we change it to 6 because, again, we're more interested in the most recent price action, the most recent candles. So anyway, is it below 20? Well, it went below 20. Okay. We're looking at the bottom here, right? Below 20. Okay. So that tells me it got really oversold. Okay. Quote unquote oversold. But then the kicker here is not only is it bouncing into the demand zone, but just for that last verification. And this is going to be similar to the Similar to the confirmation entry I show you guys, we're going to look at a 1 hour close to the upside, showing that it's trying to push momentum up. So this 1 hour candle pretty much takes the place of the, smaller time frame, 15-minute confirmation entry. In other words, when I show you guys this diagram all the time, right? And I'm still working out how I want to incorporate this. But remember, basically on the confirmation entry, we're trying to break a structure of the upside. So in this case right here, when it breaks this swing high, that's the momentum shift. Okay. So I'm still working out exactly how I want to utilize it with the 1 hour candle close. But either way, you can't go wrong. So it's really a very similar thing. Whether I want to use a 1 hour candle close since I'm on the 1 hour time frame, or just to break a structure on a 15-minute. It's going to be kind of similar, guys. But anyway, that was my cue to get into this trade, because the daily and the 1 hour are up as far as the lower number moving average, whether it's 8/21 or 50/200. Then it drops in. It collects my unfilled orders from the demand zone. It collects the liquidity from these stop losses, which are sell orders, because that's what banks need. So all I'm doing right here, guys, is trying to trade like a bank. Okay. I try not to think like a retail trader. I try to think, I look at it as if I've got $100 million account. And I do that because I have to know where the liquidity's at, right? You have to look for those stop losses to fuel your orders to the opposite side, to the direction you're after. So I'm not a banker. I don't have $100 million account, but I try to think of it like that, because the reality is the banks are the ones making all the money, right? They're the ones moving price wherever the hell they want. So if that's the case, then they've got to have liquidity. So it's all about looking for liquidity, guys. Liquidity and unfilled orders. That's really the name of the game. Let me double check my schedule real quick, guys. I just got to make sure. I've got a stream today with Trader Nick over on A1 Trading. So I just need to double check or triple check one more time. I think it's 8:30. Yeah. So 8:30 my time. So never mind. I can be on here for the rest of the time. I was thinking I was only going to be on here for an hour, but I can go ahead and make the full hour and a half today. Yeah, so basically half hour after I finish, I'll be over on Trader Nick's, guys. So keep that in mind. Let me just go pull it up. If you have not seen this yet, you can just simply go over here to Trader Nick. It's at Trader Nick. He's got 500 and almost 530 subs, guys. He's got a pretty nice page, but he added me on recently to come on and do a 30-minute skit every day or every other day. So it's kind of nice to go on there. But yeah, just go to his live section and you'll see it right here. Okay, right here. And I'll be on 30 minutes after he starts, because he starts at 8 a.m. my time, which is right when I finish. And then I usually just hop over onto his stream and watch as a viewer. And then obviously 8:30, I'll hop on for my half hour. So anyway, just wanted to let you guys know that. Zambezi, you were asking about pound Aussie. And it's still giving us a nice bearish 7. So I like it. You know what I want to do? I want to look at the history of pound Aussie real quick, just to see its recent scores over here. So let's go to pound Aussie. Guys, this is one thing I love about the Edge Finder, which, by the way, he does have this Edge Finder for 40% off this week. Okay, 40% off. When people have the Bloomberg terminal, they're typically paying anywhere from like $2,000 to $2,200 or something like that a month. Okay. With this Edge Finder, with Trader Nick's Edge Finder, this, in my opinion, has every dang thing we need, just like a Bloomberg terminal. Okay. It's not going to be like ridiculously like innate like a Bloomberg terminal, but this has everything we need as swing traders, as whatever time frame traders, for all these different assets we track. It's normally $1,400 for the Edge Finder. It's a one-time payment, but this week he's got 40% off. And I'll give you a little secret. If any of you guys are interested in it, if you pop onto his stream, there's an extra, I do believe, an extra 5% off on top of that just for being on the stream. So it's actually 45% off. So if you guys are interested, do that. I don't make any money off of it. I just like to help him out because he's blessed me so much with my trading. So I just try to, like, kind of throw that little plug out for him every, from time to time. So yeah, definitely, if you have any questions on that, guys, a1trading.com is the website. I'll drop it in the list over here. You guys can chat, take a look at it at your own leisure. a1trading.com. And there you go. But anyway, the top setups for the pound Aussie, okay, I wanted to look at the history over here. So we're obviously in a bearish territory. We're still at a minus, but now we're at a -7. So remember, we had a -7 score, but look at the last 4 days, -6s. Okay. Before that, you had a -5 and then a -4. So it looks to me like it's trying to decide if it wants to keep getting, the trend is down. The trend is more bearish, right? Okay. Started at a -4, which is a neutral score. So that's a no trade score. But then we dropped to -5, which is bearish. Okay. Then -6s and now -7. So, and if you notice the price up here, it's kind of hard to tell with these line charts, but clearly we're going down. So as the scores get weaker, I would expect more lower lows and lower highs, right? So that's a good sign. In other words, it's better that it's not like -10, -8, -8, -7, towards getting less weak. Okay. This has been getting weaker. So that's a good sign for this potential trade. So let's go a little pound Aussie. I've blabbered enough. Let's take a look at it for you. Daily, 4 hour. Okay, 4 hour wise, we're still quite away from any 4 hour supply zones, but perhaps an argument could be made for this little spot in here as well, which my new filtering system will help me out with. So let's go to a 1 hour. Yeah, see, and I think I drew that up as a 1 hour. Okay. So I think the best idea that there is right now is still just this alert that I have set. Pound Aussie. Look, and I assume you're talking about short, right? That's Zambezi. I just keep missing. Yeah, I mean, as far as entries go, you haven't missed anything in the last few days, because think about it. This has given us a short signal. Let's go back to the top setups. Okay. Very pound Aussie short, sorry. But over the since Wednesday, we've just had nothing but an uptrend, right? I mean, yeah, you did have a little bit of a difference here. Let me see here. 1 hour, 15 minutes. Yeah, so even on a 15-minute, more of the scalp range, we haven't really had a signal. So I would just say, man, this is part of trading, is sitting on your hands and just waiting for price to come to you. That's the important thing. Okay, Zambezi, where so many people fall, where so many people fail and screw up their accounts, is where where they get into the trades way too early. Even if it's a good trade idea, sometimes you can get in too early. My nose won't stop itching, guys. Ugh. So yeah, this is the fun part. This is the boring part of trading, is just sitting on your hands. Now, when you set an alert like I did here, right, then you just forget about it. Go do something else productive. Read a book, or maybe look at some other pairs. But yeah, me personally, if I were putting money on this trade, I mean, yeah, I would be looking at where my alert's at. I mean, it's really as simple as that. Now it's over 100 pips away. Now, one thing that might possibly be brewing, if we could get some more lower lows, then maybe we could turn this into a supply zone here, like that. Pull that one forward up here, right there, possibly. I mean, it does have a gap below it, but it's really not that strong. Okay, talking about that price action right there. Oh no, oops. Looks kind of weak to me. It is a gap. And then but the thing is, we kind of got sideways and lazy for a couple hours right there before having a big drop. So, and with my new strategy or the new filter system I kind of added last week, I mean, I could really look at this on a 1 hour or a 15. If I go to a 15, okay, there's the same thing. We got our 50 below our 200. Yeah, I wouldn't want to look at it on that time frame. Yeah, I mean that could come into play. This could be turning into a supply. Very well could be. Let's go look again on a 15. Yeah. 30. Probably looks better on a 30. Oh, get off my screen. Okay, if we refined it into a 30-minute, that looks a lot prettier because now your gap goes like this. Okay, that gap looks a lot better than the one I just had on a 1 hour. So I think, and by the time that happens, I may have my RSI at an overbought. So I tell you what I'm going to do for pound Aussie. I'm going to take the alert that I had up here for this supply, and I'm just going to bring it down here to this one. Keep an eye on this one. Okay. It would be nice to see it break a little lower because at this point, it's pretty much kind of made a little bit of a double bottom, has it not? So for me to be feeling pretty decent about this, I would like to see a break and close below these wicks we had over here. But also recognize we're kind of bouncing into another demand type zone right here. I would say that this wick probably touched that wick. So maybe I'm not so worried about that on a 1 hour time frame. Let's go look at a 30-minute. Take a look. No. Okay. Come here. So that wick there comes down and tags that. So from a 30-minute, I'm not too worried about that. But we do have a 30-minute zone right here that didn't touch so that didn't touch. Okay, that price retraced but did not touch this new demand. So that's a new 30-minute to be aware of. Okay, just to be aware of. It's always good. Again, it's like shooting pool, guys. If any of you shoot 9-ball or 8-ball billiards, it's always good to look a few balls ahead, right? 2, 3, 4 balls ahead so that you can position your ball when you shoot your current shot. So it's kind of the same thing in trading. We want to be looking 2 or 3 moves ahead. In other words, I want to short this, but before I short it, am I going to run into any potential trouble? Yeah, potentially down here. But that's not going to affect my trade because, if that's my potential profit target and I wait for a retracement to the supply, depending on how we get into this trade, let's just say your stop loss is up here somewhere. Okay. We'll call that a 50 pip stop loss. Well, now if we go down here to the demand zone, that's almost 150. So that's basically a 3-to-1 trade. So that's a good profit target. Okay. It's a good trade that would pay you pretty decent, right? 3-to-1 is pretty decent. 2-to-1 minimum, but 3-to-1 is more ideal when it comes to taking trades that will pay you. So anyway, that's pound Aussie. We're currently going through this little bit of chop action here, so not really a whole lot to do. Yeah, it's just about sitting on your hands, like we talked about. That's the fun / boring part about trading. But the thing is, guys, trading. If you don't remember anything else from today, remember this: trading is not designed to be exciting. Okay, if you're looking for excitement, go to a slot machine. Don't trade. Right. At least you'll see pretty colors. Well, we have pretty colors too, but the point is trading is supposed to be looked at as a calculated risk, as probabilities. There's probabilities in trading, okay? And all we're trying to do in trading is add as many high quality probabilities in our favor, odds enhancers, okay? add as many odds enhancers in our favor when we're looking at a potential trade setup, as many as we possibly can. That way, we're not just throwing mud on a wall to see what sticks. That way, we're not just pulling the handle on a slot machine. Okay? You have to be able to define why you got in, why you put your stop loss where you put it, and just as important, why your take profit is lined up wherever it's at. Okay, so again, having a predefined stop out for your profit, having a predefined stop out for your stop loss, potential stop loss, and then why are you getting into the trade to begin with? Okay? So I have to ask myself all those things. Why get in? Why am I timing it for when I'm timing it? Why am I putting my line in the sand where I'm putting it? I would actually probably put that a little higher like that. Why am I looking to get out in my profit target wherever I set it? And then risk management, guys. What percentage of my account am I willing to bet that I'm right on this trade? Okay. It's not Russian roulette. We don't want to be wagered too much, just small amounts. There's the ripple effect. Okay, the ripple effect. If you guys are looking for a good book to read, I highly recommend you go look up The Compound Effect. Okay, The Compound Effect. This book is awesome. Right here. I don't know which one of these I watched, but I read this book. But this is basically teaching. This is basically trading, guys. Here, go find you one of those book reviews. I just put it in the chat. He's going to talk about a couple things. A penny doubled every day for a month and how much you have at the end of the month. He's going to talk about something called the ripple effect. Throwing a pebble in a pond or a lake and seeing those pebbles grow, seeing those waves, okay, seeing how they grow just from one little tiny pebble. So it's just a couple little tricks, a couple little things for your mind to think about, and the power of the compound effect, okay? The power of growing from tiny bits. That's what trading is supposed to be. It's not supposed to be a bet everything on red or bet everything on black. Okay, the YOLO traders of the world. Yeah, they might get they might get lucky at one time, but then they keep that up. They're going to blow their account. Okay, they're going to breach their challenge account, or if they have a cash account, they're going to YOLO it and they're going to blow it. Okay, they might get lucky once or twice, but the house always wins. So the whole point of trading is take what the market gives you. If you're in the casino, you win once or twice. Hey, take what the house gave you. Same thing in trading. If you win once or twice, small amounts, take what the market gives you, go reevaluate, start looking for your next trade. So anyway, getting back to top setups. So we looked at pound Aussie. Let's look at pound CAD, since that's our other strong bearish asset right now. I think this is the one that I really don't care a lot about because it is quite, hold on a second. Let's go. Okay, so daily. All right, so my 8 is below my 21. So that's showing me a good sign that I am in a downtrend. We have bounced into a 4-hour demand, which was pretty neat, pretty nice and strong looking. We've already bounced into it a few times, though. Bounced here, got a reaction. Bounced here, got a reaction. Bounced here, got a reaction. So now we're back. We're all the way back, guys. Okay. So I would expect potentially we could get another bounce. Now it's not a fresh demand zone. It's old. It's an old news at this point. But at this point, it turns into potential, support because you've had a few bounces. Now I ain't trying to be selling it right here because I'm at the bottom of the curve. Okay. Let's go back to a daily real quick. Actually, I need to redraw my curve. Let's delete that. Okay, curve analysis. We'll just call it like this right here. Okay, swing low to most recent swing high. Wrap my curve analysis tool around it, and I've got to see where I'm at. Am I in the discount zone? Am I in the premium zone? Or am I diddling in the middle, right? Well, I'm at the bottom quadrant, the bottom third. So I'm in the discount zone. So do I want to sell in discount? No. I want to sell in premium. Okay. Think about it. When we're buying, we want to buy down here because it's crab legs half off, right? Crab legs half off. Do we want to buy up here? No, we're paying full price up here. I don't want to pay full price for them crab legs. Although if it goes on discount, then it could be, could be spoiled. So yeah, maybe we should find a better example. But anyway, I also, if I'm the one selling those crab legs, okay, let's just assume it's not spoiled here for a second. Okay. I don't want to be selling in a discount zone. I want to be up here selling at premium. Okay. You got a used car. You want to sell it down here for $10,000? Or do you want to sell it up here for $15,000? How much money do you want to make? Remember, the way we buy or sell in trading is the exact same way we should be buying and selling anything in our everyday lives. So I'm trying to sell for as much money as I possibly can. I got to do it in a premium zone. This is a premium zone. Down here is not. So anyway, pound CAD. Let's see here. Yeah, see, that's an old zone up here that worked out. So I got to get rid of it because it's already over with. It's already old news. And I'm more oh, you know what? I forgot. I did have a smaller time frame inside, I think. Was it a 15? Let me go look at this zone again. See what we got. I've got it colored light red because it's been touched. Oh, yeah, that's right, guys. Well, yeah, I totally remember. So I've got my alert set here because of this, because of that 1 hour, that 15-minute candle, rather. Okay. This green candle, followed by this big drop with higher increase of volume spread analysis activity. Okay. That candle, that VSA candle, was like what, 4 times bigger than the previous candles? 4 or 5 times, something like that. Strong drop, break a structure. So that's a very nice, it's a potentially scary looking area. I got to keep in mind. I feel like let me change my sizings. There we go. Okay, so that's why I have an alert right there, just ahead of that. And obviously, when you pan out, I mean, it was just a big overall drop continuation. So now we touched the 1 hour because I had this set up initially as a 1 hour supply. Okay. And even that doesn't look right. Was it a 30-minute? Good grief, Tiger. What did you have over here? Oh, 30-minute. Okay. So I initially had it look up here as a 30-minute because the wick goes down a little deeper. Well, we've touched the wick. So as far as looking at it on a 30-minute, I can't because the wick's been touched. It's been mitigated. Now, this is where I'm kind of, not necessarily taking the highest probability because price has already been in the area and then dropped away. So it's a little bit of it's a -1 when we get back to this zone as far as looking at it from the 15-minute time frame level. But, it's something I'm willing to look at. My nose will not stop itching, ladies and gents. Somebody's thinking about me. Isn't that what they say? When your nose itches, somebody's thinking about you. So anyway, guys, that's what I'm looking at. That's actually a little higher up above the curve. But the cool thing is, kind of like the trade we just looked at a little bit ago for Aussie New Zealand. Look at this. We got topping action over here. We got topping action here. So is that not a higher time frame double top? What's going to be on the other side of the double top action? Okay, if traders sold the market to push price down, they left their stop losses up here, right? Their stop losses are buy orders. Same thing over here. Okay. These traders here, did they not put stop loss orders above their short orders? These people that shorted the market here to push price down. There's liquidity up here. Right? My goodness. Liquidity. There's a bunch of buy orders just chilling up here inside of this demand zone where there's other unfilled orders. Okay. So I'm definitely interested in that. Interested in that. What else you guys got? Let me know what you guys got. We have got CPI coming out for Canada here shortly. Talking about the month over month and the median and trimmed. Man. Ah, my goodness. Talking about currency strength, let's take a look at the surprise index real quick, the surprise meter for the currencies, guys. So currently, and again, I don't really trade the South African rand. I don't trade the Turkish lira. They are on here. I don't trade the Chinese yuan. Okay. But as far as the actionable currencies up here, the strongest one currently is the Aussie dollar. Okay. It's exceeded expectations on 2/3 of its high impact events, high impact economic releases, right? So if we're just isolating fundamental analysis by itself, which is what big banks talk about, anytime they're on CNBC, anytime they're on Bloomberg Markets, okay, on TV or or their YouTube channels or whatever, what are they talking about? They're talking about inflation. They're talking about GDP numbers. They're talking about the PMIs, the PPIs. They're talking about the interest rates, and not to mention geopolitics, right? How that's going to affect the currencies. So, but again, from a fundamental analysis, that's where everything starts. That's the reason to get into a trade. That's our why. That is our why to get into the trade. Okay. And then the nice added confluence, as always, is the sentiment. Are we following the footsteps of the big banks, looking at the COT report? Are we then going against the grain of the average retail trader? Okay. From the retail sentiment, the put to call ratio for the options market, looking at AAII investor sentiment surveys. Okay. That's all of our sentiment analysis. Crowd sentiment right here, guys. Put to call ratios. Okay. We're going against the options market because that's the whole point. Taking a look at the AAII sentiment. In other words, if we're trying to buy something, is the crowd more bearish over the next 6 months as far as their outlook on the stock market itself? In this case, the buyers have a slight lead, meaning there's slightly more people interested in buying the market than there is selling. So it's pretty neutral. But, if you're wanting to look at it with a fine-tooth comb, then you could say the contrarian signal would be to short the market. Because if more people are thinking the price is going up and most people lose their money, then do we want to follow them or do we want to do the opposite? Okay. That's AAII sentiment, AAII survey. Okay. Obviously, your regular retail sentiment, looking at the real-time positions. Okay, of course, we just care about the currencies. Now I'll just get rid of commodities, metals. There's your currencies. What do we got over here, by the way? What's the average retail trader? Where are they positioned? So they're positioned the most on the Euro Swiss, the very top. So think about this. They are the average retail trader, 89% of them are in long positions. So if 89% are in long positions, what do we want to do? Do we want to go long? No, we want to observe the masses and do the opposite, right? Euro Swiss, we'd want to short. Dollar Swiss, we'd want to short. I would say over 60, over 65, 70 territory. If they're 70 or higher long, I want to be looking for the opposite direction. Okay. Now keep in mind, when the combination of the retail sentiment, depending on the asset, the put to call ratio, okay, the I cannot say that word, AAII sentiment. Okay. This formula for your sentiment analysis. Okay, just remember that goes in with the COT report right here for the sentiment. So that's one section. So in other words, the fundamental analysis, these three up top, this is the reason to get in. The sentiment, okay, the relationship between smart money and dumb money. That is the confirmation. And then the timing is your technicals. Technical analysis, the sexy part of trading, okay, that everybody likes, that everybody is trying to find this strategy and that strategy. That is all that is a timing mechanism, but it's not a reason to get into a trade, right? If you find a really, really good spot on pound Canada dollar pair, if you find a really good spot, in your opinion, to buy the market, well, just remember when you buy, the smart money is going to be on the opposite side, shorten it to collect your liquidity, right? Because most of the items are favoring the quote currency, in this case, the Canada dollar, right? So just remember that. Technical analysis is not the reason to get into a chart, into a trade. It is the timing mechanism. The reason to get into a trade is the fundamental analysis and then the confirmation from the sentiment analysis, guys. So anyway, I just wanted to kind of dig in a little deeper on that. And you guys know this very well, because when you go on to YouTube, and you type in how to trade or how to learn to trade or whatever, all you see is technicals. All you see is charts, right? You don't see anybody talking about the fundamental stuff. And I'm wondering, because I saw a really cool video. I'm going to find this that kind of talked about the fundamental. Let's see, high impact add folder. A really cool video I found one time that just kind of broke everything down. I may have to dig in and a little deeper and find this, because it was a really good, like, quick explanation of CPI, the PPI, the GDP, okay, the interest rates, all that stuff. I'll have to find it and maybe share it tomorrow. Yeah, I'll dig into that tomorrow, guys. But I just thought I saw it a long time ago. Thought it was a really simple explanation, because remember, we don't have to be economists at all. Leave the economists to doing these reports. Sorry about that. I lost you guys for a minute. Get my goodies shared again. All right, so I'm just gonna, well, here in a minute, guys, again, we got CPI coming out. Sorry, I lost you there for a minute. I think I got you back. Let's take a quick look at gold. Because remember, guys, gold and silver, I think, are kind of going in opposite directions at the moment. Let's go to a 4-hour. Okay, gold right there, higher highs. Well, barely a higher high, guys, if you want to count a measly wick. Oh, okay. Okay. So gold. Now, we were getting a bullish signal yesterday, but remember, it's kind of went back to neutral again. Let me go look at the current score of gold. So gold is down to a +1. So it's as neutral gets. So yeah, I was just curious about it because sorry, going back to my regular chart. Remember, I do have a little bit of an interest in this demand zone down below, this 4-hour zone. Just a little bit. But now that I just realized that we went to neutral, probably not as interested in gold now. Again, like I drew up yesterday, I'm really not that excited about gold unless we break this swing high and close up here somewhere, anywhere up here. And then we could look for a retracement back to the, former resistance to possibly become support, but hopefully, have a newly created demand zone somewhere in there. So that's probably still my favorite spot on gold because that would prove that it's a continuation of this uptrend. Okay. So there's a high, there's a higher low, barely a higher high. Could this be some higher lows? Could this just be a double bottom? But again, I'm looking for a new higher high that actually closes above this area. That would prove to me that it's really legit, really trying to continue up. And where is price going to go? As always, typically gets ping-pong between supply and demand zones, higher time frame. So I would expect a move to this supply zone up here. Okay, that'd be this leg right here. Right, that's the meat of the move I'd be wanting to try to potentially catch. But again, it all changed because it's just back down to a +1 score. So it's neutral, guys. Zero help on the technicals at the moment, zero help on the sentiment, and only 1 point of positivity from the fundamental analysis from the Echo calendar. Okay. But anyway, that's gold. Silver, okay, it's retracing as well. But remember, silver's got that lower set of lows and highs, right? So it's just the opposite of gold. Okay? And gold isn't even that strong. Remember, we're getting 0 points for technicals on gold. So yeah, I mean, I would just call this kind of sideways at the moment until we close above here. Anyway, Bitcoin. Look at Bitcoin for a minute. Because Bitcoin remember, Bitcoin's neutral. It's not giving us any strong reason to buy or sell this thing. We did come down to the 70,000 amount. We did drop to 60,000 at one point. And remember, that's where we bounced into the combination of the daily, the weekly, and the monthly demand zones. That's a strong confluence right there, right? Then we had the monthly here, okay? Strong confluence. And just for the sake of getting it out of the way, that's why I just move it over. But remember, we hit all three of those. We got this strong rejection candle with a lot of volume. And then after that, after these unfilled orders were strong enough to push price up pretty hard like that, it just died off and went sideways. So, sideways trend on your Bitcoin, same thing. Not really interested in trading this unless we start getting in a new series of higher highs and lows or lower highs and lows, right? But currently it's just sideways. So no trade, no interest in this market. Zero. Sorry, guys, I lost you again there. I'm just pulling up. Okay. Never mind. No, I was just looking at something. So anyway, yeah, sorry, guys. My stream died again. Let me get my screen shared again. Okay, so yeah, I was talking about this the CPI report that just came out. So this is where it gets a little tricky, especially for beginners, because the previous report on the CPI was a minus 0.2%, minus 0.2%. But if we basically increased, we increased to zero, right? But it's an increase from the negative 0.2, right? Currencies thrive on inflation, right? It's kind of a weird way to look at it because inflation hurts our pocketbooks, it hurts the stock market, but in currency land, it's different dynamics. So this should be green, right? It's higher than the previous. Well, remember, the thing that matters is not necessarily the comparison from the previous report to the current one. The comparison is how the actual number comes out relative to what the economists think, right? So the economists predicted 0.1% increase, but it came out 0.1% lower, which was straight up zero. So that's why it's colored red. That's why it's technically bearish for the currency, even though it was higher than the previous number. Okay. This trips a lot of people up. But just remember, as weird as it sounds, all we care about is the comparison to what the economists factor in, what the economists do with all their algorithms and their computer, mathematics models and computer models and all that. So bearish number for the CPI for Canada. Let's go have a look at the dollar CAD just to get a peek and see if it did anything. And sure enough, okay, that report came out 8 minutes ago. So it came out right here. This is a 1 minute chart. Came out right here. So there's your 1 minute candle when that number was released. You see a spike in volume spread analysis activity. Okay, bigger than all the candles recent to it. And then we get a push up. Now that's not that giant of a push yet. Okay, it's only been about 8-9 minutes. And we have pushed up on dollar CAD. We've pushed up 15 pips, we'll call it, right? 15 pips. Now, dollar CAD doesn't move that much in a day. It only moves about what? 70 pips. Okay, so it does move 70 pips in a day. So it's a little lower than what I like. I like 80 pips or higher minimum, preferably 100 or higher. I want something that's going to move, right? But that's not to say I won't trade a ATR that's down in the 40s, 50s, because I've done pretty well on them. But I just like stuff that moves. I want to get in and out of a trade just fairly as quick as I can, mainly just so I can be out by the time the market closes on a Friday. I don't want to be holding trades over the weekend. It's just kind of some sketchy times to do it. So anyway, dollar CAD, yeah, as expected, because we had a bearish release for the Canada, which is our quote currency, right? Our quote currency, meaning it's the second currency. That means the base currency, which is the dollar, should go up. And that's clearly what we're seeing right now. So again, 15 pips. It's not like it's gigantic. It's not like it's moved 30, 40 pips or anything, but it's behaving exactly how it should. Dollar appreciation, right? But it's, oh yeah, you know what? Yeah, so it has come back to bearish or neutral territory. So I don't have a reason to trade dollar CAD from a fundamental sentiment point of view. I'm just refreshing my edge finder here so I can see if anything's changed. Yeah, so see dollar CAD. If I go to my neutrals, where you at? Dollar CAD, dollar CAD, dollar CAD. There's dollar Swiss. Okay, neutral. So see there, it's -1. We had a nice bearish rating on this just the other day, but yeah, it's just too neutral, guys. It's too neutral. We obviously don't want to trade during a news release or those few minutes before or those few minutes after. We want to avoid that, but since and as you see, I actually had drawn up a 1 hour supply zone here at one time. I did that when price was, down in this area because it was giving me the other day, it was giving a bearish signal. Now some things have flipped. Some things have flipped to push it back to neutral. I loved the fact that we had this resistance right here. I was actually pretty excited about this at one point. See all those points where price is touching right through there? Oh my gosh. Okay, talking about these points back here. I was excited that that was going to be creating some liquidity above it. Okay, talking about these stop losses right here, which are inside of these unfilled orders from the supply zone. But everything shifted, guys. Everything shifted. Let's go look at the dollar CAD a little more in detail on the heat map. Okay, let's look at the buck. Okay. So in the last 7 days, the unemployment rate had a much better number. Okay, 4.4 down to 4.3 on unemployment rate. We did have some bearish stuff come out, couple bullish, couple bearish. Okay, for the dollar. This is the last 7 days. These yellow, or I should say, these orange font colors over here. So there's bearish retail sales. There's bearish CPI. There's bearish jobless claims. But where the dollar gained its strength was from a couple things. The unemployment rate being 0.1% lower, and the nice non-farm payroll result we had, guys. Remember, we more than, let's see, 714. We almost doubled up the forecast on non-farm payroll, on jobs. Okay. Forecast was, I thought the forecast was 70,000. Maybe they adjusted it to 66, but it was 66,000 from a previous report of 50. So they expected an increase, but the increase was pretty much double. Okay. U.S. got a lot of jobs last month. So that right there was a damn good thing. A damn good, nice surprise for the U.S. dollar. Conversely, if we go to the Canada dollar, which is the other half of that, we haven't really had anything of late. Okay. Last report we had for Canada looks like it was, the employment numbers back on the 6th. So that was 11 days ago, right? But because of that U.S. dollar, because of that non-farm payroll strengthening, okay, the dollar, that's why we went from a bearish signal back up here to neutral. And as a result, it's a good thing that I pay attention to fundamentals, because ordinarily I would have probably got in on this supply zone right here. But look what happened. Price chewed through it. Okay. It chewed through it because it didn't have a reason to turn and go down. Not to mention the non-farm payroll. Right? Let's see, non-farm, right here. Somewhere down here. Down here, I think it was. Big spike up. Non-farm. Chewed through the supply zone. It's neutral. That's why I stayed out of this trade. I had my alert go off. But the fundamentals didn't add up. Did not add up, guys and gals. So anyway, I'm just going to keep monitoring, guys, this Aussie New Zealand trade I'm in. I'm going to hop on over to Trader Nick's stream, which starts in 15 minutes. I've got to do a couple things to prepare for it. And then remember, I'll be on in 45 minutes from now. Okay, 8:30 Central Standard Time. But I'm going to go ahead and hop off of here. We'll check more into this tomorrow. I'll let you know how my Aussie New Zealand goes. I'll let you know if I'm getting in any other trades today. But just be careful around these events, guys. Okay. Obviously, we're done with the CPI for Canada, but just remember tonight, if you're trading the Kiwi, okay, if you're in a Kiwi position, just be aware that they are expected to release that. We'll definitely want to see what the rate statement comes out to be. Okay, are they going to talk hawkish? Are they going to talk dovish in their lingo, their language? And in fact, in the morning, I'll do a quick half-page summary of this just to see what the verdict was. Hey, was it hawkish? Was it dovish? Okay. So anyway, I'm going to hop off of here, guys. If you would come over and see me, I'll be back tomorrow, 6:30 a.m. Central Standard Time. Oh, by the way, one last thing, guys. I did, just to finish with this, I did do a quick video yesterday. Let me know, guys. Did a quick 5-minute video, just like a recap of the day, which obviously yesterday was quite quiet with news. But I did kind of a prelude, or I shouldn't say a preview of the rest of the week's economic calendar, geopolitics, things that move the markets. Let me know if you guys like these. It's just, I like to be silly with it. Trading is boring. You guys if you don't know, you'll figure it out. Trading can get quite boring. So I thought, well, why not have a little fun? I'll make a little news piece like I used to do when I was with Ola Prime, and just throw some puns and humor into it. So, to dress it up, liven it up. So let me know what you guys think. Again, just go to @TradeLikeATiger, click on my videos tab, and you'll see it. You'll see it in here. Okay, it'll be in the daily recaps playlist specifically. But keep an eye on my shorts, my lives. I do my Sunday weekly top setups typically as well. So check those out. And much love to you guys. Look forward to seeing you guys tomorrow. Have a good day, okay?